Good morning, everyone, and thank you for joining. Welcome to our Reg webinar. My name's Zoe. I'm the Marketing Manager at RegTechnologies, and I'm joined here today with Victoria, our Head of Sales. Thank you for joining our exclusive webinar. We're going to be exploring how insurance firms can reimagine their approach to counterparty risk and operational efficiency by using RegTech that's built for the real-world regulatory pressures you face. Let's be honest, compliance in insurance has become a full-time obstacle course. Whether you're dealing with brokers, MGAs, cover holders, or delegated authority structures, your risk exposure is growing, and so are the expectations from regulators like the FCA and Lloyd's. Our goal today is to show you what's possible when the right technology is applied in the right way. With Reg, you can go beyond just managing compliance. You can actually accelerate it, simplify it, and scale it as your business grows. Because here's the reality, regulatory demands aren't going away. They're getting heavier, faster, and more complex. So firms must get faster, smarter, and safer, or risk falling behind. Here's a quick look at what we're going to be covering today. First, we'll look at the current regulatory and operational landscape and why so many firms are struggling to stay compliant and agile. Then we'll show how RegTech, like Reg, can modernize counterparty risk management from onboarding through to ongoing oversight. We'll explore how automation solves for inefficiency, freeing up your compliance teams to focus on strategy, not spreadsheets. And finally, we'll show how Reg fits into your existing ecosystem with a real-world case study and time for your questions. By the end of the session, hopefully you understand how to gain complete oversight of your counterparties, how to reduce risk across the distribution chain, why automation is key to modern compliance success, and how Reg supports ongoing FCA and Lloyd's expectations. There'll be time for questions at the end, but feel free to drop them in the chat throughout the session. So let's talk about the reality you're facing today. Compliance is complicated, especially in insurance. You're navigating a complex distribution chain with hundreds, sometimes thousands of counterparties across brokers, MGAs, cover holders, and intermediaries. Each one presents a potential compliance risk. Their FCA permissions might change, their TOBAs might be outdated, and yet you're expected to keep track of it all, often manually across spreadsheets, shared inboxes, siloed systems, and legacy tools. At the same time, the regulatory burden is intensifying, with 74% of firms in our recent research stating that the regulatory burden has increased in the last year. Why might that be? Well, constant regulatory change, fragmented operational systems, rising costs of compliance, and an intense pressure to reduce risk while moving faster. New requirements from consumer duty to fair value, operational resilience, and financial crime prevention are coming thick and fast. Scrutiny from the FCA is sharper than ever, and regulators are expecting not just compliance, but evidence of robust, repeatable processes behind it. And all this lands on already overstretched teams who are stuck managing manual tasks instead of focusing on strategic oversight. Data is fragmented, onboarding is slow, and vital information often slips through the cracks. So what does this really mean? Missed opportunities, delayed revenue, and lost partnerships. The industry knows it and the data shows it, and in fact, only 18% of the market really employs technology to build efficiency and operational resilience. That gap leads to missed opportunities, delayed revenue, and damaged relationships. But more than that, it creates risk, because when your compliance process is held together by ad hoc checks, manual updates, and incomplete visibility, it's not a question of if something goes wrong, it's when. So it isn't really just about inefficiency, it's exposure, and it's also avoidable. On top of internal challenges, the external pressure is mounting. From the FCA's increasing scrutiny of third-party oversight and operational resilience to Lloyd's delegated authority model demanding transparency, the bar for compliance is rising fast. The FCA has been crystal clear. Firms must demonstrate auditable end-to-end oversight of counterparties, not just at onboarding, but throughout the life cycle. This includes sanctions monitoring, financial stability, and regulatory permissions, all tracked in real time. So let's talk about some of the most pressing regulatory focus points. Number one, consumer duty and fair value. The FCA's consumer duty, which was effective from July 2023 for open products and July 2024 for closed products, mandates firms to ensure their products and services deliver good outcomes for consumers. A thematic review in August 2024 revealed that many insurers still struggle to demonstrate fair value, with deficiencies in product governance and oversight leading to potential consumer harm. Furthermore, the FCA's review of firms' consumer duty outcomes monitoring in June 2024 highlighted that many insurance firms need to improve their monitoring practices, including the range and type of metrics used, oversight, and actions taken as a result of monitoring. Number 2, operational resilience. Operational resilience remains a priority for the FCA. In their 2024 annual report, the FCA emphasised the importance of service and operational resilience, highlighting the need for firms to upgrade technology networks, cloud environments, and cybersecurity platforms to ensure uninterrupted services. Number 3, AML scrutiny. The FCA continues to enhance its focus on financial crime prevention. Updates to the Financial Crime Guide underscore the necessity for firms to have robust systems and controls to detect and prevent money laundering activities. The FCA expects firms to act proactively in identifying and mitigating AML risks. And finally, embracing technology and innovation. The FCA encourages firms to adopt innovative technologies to improve compliance and operational efficiency. The AI update report highlights the regulator's focus on how firms can safely and responsibly adopt these technologies like AI, ensuring that such innovations benefit consumers and markets without compromising regulatory expectations. In short, firms that can swiftly adapt to these regulatory expectations by leveraging technology and governance frameworks will not only ensure compliance, but also gain a competitive advantage in the market. So, what's the solution? RegTech isn't just about digital transformation, it's about targeted transformation, taking those clunky, repetitive manual workflows and replacing them with automated real-time systems that can keep up with both regulatory change and business growth. Think about onboarding, think about TOBA governance, and think about risk alerts and due diligence updates. With Reg, these processes are streamlined, integrated, and compliant by design. And the benefits are massive. Faster onboarding, from weeks to hours, reduced manual workload, freeing up time for strategic compliance, and real-time visibility into risk, permissions, and document status. And I think here's a stat that really highlights the need. While 90% of firms say that meeting external compliance requirements is a top priority, most only review their processes annually. In today's regulatory climate, is that really enough? RegTech was really built to close that gap, to give you the tools, data, and automation you need to manage counterparty risk faster, smarter, and safer.
Thank you. Good morning, everyone. So what is counterparty risk? Counterparty risk is the exposure you take on by working with third parties, whether that be brokers, cover holders, MGAs, or suppliers. Aside from the expectations from regulators, the real risk is that the counterparty fails to fulfill its contractual or financial obligations, potentially causing financial loss, operational disruption, or reputational damage. Challenges might include a partner's regulatory status or permissions changing, or their financial stability decreasing overnight, putting them at high risk of insolvency. And yet, many firms only check this data sporadically, if at all, often relying on a once and done approach. This is a major risk, especially as you scale. Managing this manually doesn't work anymore. Without real-time visibility, you're flying blind. The onboarding process is often seen as a bottleneck in the market due to a combination of regulatory demands, fragmented workflows, manual processes, and inconsistent standards. Onboarding is often where the delays start. Chasing for documents, sign-offs, and status checks, all through emails or spreadsheets, is inefficient and risky. These factors slow down time to trade and creates friction between departments. In terms of a typical onboarding process, which you'll see here, when firms are opening a new agency, an application form must be completed, which can be dozens of pages long and therefore take weeks to complete, which then needs to be verified and assessed. Following this step, a risk assessment must be carried out. This normally involves a person or a team searching various and multiple public databases to find the required due diligence information, often through archaic and unfriendly databases, with regulatory registers being particularly difficult to navigate, making it time-consuming, inefficient, and a drain on people resource. Finally, a TOBA would be issued, which should be signed by both parties once terms have been agreed, which in itself is not a straightforward process. Throughout the years, Reg has carried out extensive research to understand attitudes and sentiments in the market across several topics, one of which looks at new business relationships. In the most recent report, 66% of both general insurance and financial services respondents felt that regulatory and statutory obligations slow down starting new relationships, compared to an average of 47% just 4 years ago. This suggests that organisations are increasingly struggling to meet compliance demands when it comes to starting new relationships, and so will limit their number simply because the process to open and administer them is slow and costly, resulting in missed revenue opportunities. With Reg, you automate the entire process. With full and instant KYB checks, agency application and TOBA exchange, it all happens in platform, with real-time updates and compliance checkpoints baked in. The result? Onboarding that's faster, more transparent and fully compliant from day one. As referenced earlier, many firms still treat due diligence as a once and done task, with our research reporting that over 70% of the market still rely on infrequent reviews and manual processes when reviewing their counterparties. But true risk management is ongoing. Without proper oversight, it leaves defence systems weak, with compliance companies more susceptible to compliance breaches. Think about it. You or your team could spend hours finding and creating full risk profiles across all the relevant and necessary due diligence data points on a new partner, which can be even more challenging and time-consuming when dealing with partners that are overseas. If or when you complete this task, the information is redundant as it's immediately out of date. Failing to implement continuous due diligence exposes firms to a range of risks, whether that be financial, operational, or reputational. Many of these risks can emerge between onboarding and scheduled reviews, assuming there even are reviews, making static or periodic due diligence insufficient, to say the least. Let's break some of these risks down. So first, we've got the financial risk, the key one being counterparty default. Without ongoing financial health checks, you may not detect declining liquidity until they fail to meet their obligation. And an example, a broker starts missing client premium payments. Regulatory and compliance risk. Undetected violations of AML, sanctions or data protection laws can result in regulatory penalties for your firm. An example, a cover holder is added to a sanctions list or fails to meet fair value requirements whilst you continue to trade with them as you're unaware. Operational risk. You outsource claims handling to a TPA who is breached or under investigation, affecting data security. Without ongoing monitoring, these issues may escalate unnoticed. And finally, reputational risk. Any association with an unethical or non-compliant counterparty will invariably damage your brand. An example, an MGA you're trading with being involved in discriminatory underwriting practices. You're implicated simply by association. These highlight just some of the risks of not conducting continuous due diligence. This gap exposes firms to avoidable, compoundable, and often very expensive risks that could be identified with real-time monitoring. A modern risk-aware organisation should embed ongoing monitoring, ideally through a number of things such as third-party risk management platforms with automated alerts, including any credit depreciations or sanction matches, periodic attestations, and integration with regulatory watch lists and adverse media screening. With Reg, it continuously monitors counterparties for changes in permissions, controls, sanctions, and financial status, to name but a few. You get notified in real time, enabling early stage risk mitigation so you can act before problems emerge and escalate. Continuous due diligence is becoming increasingly important as it ensures ongoing compliance, timely risk identification, and a proactive approach to ever-evolving regulations. It's like turning on the headlights so you can see what's coming down the road. Counterparty risk management is too often an entirely disjointed process. My own experience in the market sees the same issues time and time again, suffering from a lack of centralisation, consistency, and integration across departments, systems, and lifecycle stages of third-party relationships. In large organisations, this is especially familiar, with siloed functions and disconnected teams. Underwriting, compliance, legal and finance teams might all be involved in broker onboarding and counterparty risk management, but they often work in silos, using different systems and spreadsheets, lacking a shared platform or workflow. This results in fragmented communication, duplication of efforts, and lengthy coordination delays. This fragmentation increases the risk exposure of insurers and undermines their ability to effectively monitor, control, and respond to counterparty risks. Without centralised oversight, it's also difficult to track progress and drive timelines. Imagine one dashboard where you can see every counterparty, their current compliance status, and any flagged risks alongside any associated documentation. That's exactly what Reg delivers, a single and centralized view of your entire network of B2B partners. In terms of onboarding, it will standardize those processes and even enable risk-based tiering to fast-track low-risk partners. You can also drill down into details, track documentation, view TOBA statuses, and instantly identify areas of concern. By consolidating data into a single dashboard and repository, all stakeholders can see the same real-time risk on each counterparty, empowering firms to make faster, smarter, and safer decisions across the entire counterparty lifecycle without juggling multiple systems.
So now let's turn to efficiency, because even when your compliance team is doing everything right, it can still feel like a losing battle, not because of the people, but because of the process. Manual admin is a silent killer of time and morale. Teams lose hours copying data across multiple systems, constantly chasing updates from brokers and partners, and building reports from scratch, often relying on outdated spreadsheets or fragmented tools. This drains energy and lowers team morale. The current tools used to manage regulatory, legal, and compliance risks within the general insurance and wider financial services sectors, and as identified by our research, are primarily CRMs and policy administration systems. These are often inadequate and outdated. Alarmingly, many teams still rely heavily on error-prone spreadsheets, despite the well-known risks they pose. Paper-based methods remain a weak fallback for some, highlighting a lack of modernisation. Worse still, nearly half of respondents admit that cross-team collaboration is only partially effective, exposing serious flaws in process integration. This fragmented and inefficient approach leaves firms vulnerable to costly mistakes and delays. It's clear that without thorough and frequent reviews of these broken processes, companies will continue to struggle with slow, error-ridden compliance workflows that hold back progress. It's not just inefficient, it's exhausting, and the cost is twofold. You're slower to respond to emerging risks and opportunities, and skilled staff get stuck on low-value, repetitive tasks instead of focusing on what they do best, which is protecting the business, driving customer satisfaction, and seizing strategic opportunities that grow trade and revenue. Realistically, compliance should be a strategic enabler, not a burden, but right now, too many firms are stuck in firefighting mode. So, how do we fix that? Well, we start by automating the mundane. With RegTech, tasks like documentation issuance is handled automatically, ensuring timely and accurate delivery. Risk status tracking is updated in real time to keep you informed on every counterparty's risk level. Document alerts notify you when key documents expire or need renewal, preventing compliance gaps. Quarterly reviews are scheduled and tracked automatically, so no deadlines are missed. AML monitoring runs continuously to flag any suspicious activity or sanctions list matches. Automating reporting generates compliance and risk reports instantly, saving time and effort. TOBA issuance tracks change and updates automatically, ensuring delegated authority is always current, and email triggers notify relevant teams about required actions or escalations. That means no more did we chase that broker or when did their permissions change. It's all tracked, triggered, and visible automatically. This brings three key benefits: fewer errors, human mistakes are reduced when admin is handled by software; consistency, everyone follows the same process every time; and you get your time back. Your team can focus on strategy, not spreadsheets. And it's not about replacing people, it's about unlocking their true value. Another challenge we hear all the time: we can't make fast decisions because we're waiting on reports. And it's true, reporting is often delayed, inconsistent, or cobbled together across multiple platforms. But decision makers from the boardroom to the front line need reliable, real-time data, and they need it yesterday. RegTech brings everything into one place, from onboarding metrics to TOBA summaries, from partner risk ratings to audit trails. You've got it all, like Victoria said, in one live dashboard. Whether you're prepping for a regulatory audit, responding to an internal escalation, or presenting to your senior leadership team, the insight is already there, accurate and up to date. And that translates into faster, smarter decisions. Finally, let's talk about scale, because growth is great until it breaks your processes. More counterparties mean more due diligence, and more TOBAs, more risk. And if your compliance model is still built on manual tracking and periodic checks, it simply won't scale. This is where Reg makes a difference. By automating the heavy lifting, we allow compliance teams to manage growth without breaking under the pressure. Think of us as like the connective tissue that links all your counterparties and systems while keeping your compliance clean, auditable, and controlled. It's why forward-looking firms are moving beyond spreadsheets and inboxes and turning to RegTech to make their operations not just faster, but more resilient.
So let's take a deeper dive into the 3 key tenets of Reg and how it supports our customers and anyone here today not already using a RegTech solution. Firstly, you've got the Reg Network. So the Reg Network enables you to find and onboard any company you want to trade with worldwide and maintain oversight throughout that customer lifecycle. You can build your own digital network of partners, which will facilitate faster and safer B2B interactions. Features include AML screening on both the firm and relevant affiliated individuals against sanction, politically exposed persons, also known as PEPs, and adverse media lists, to mitigate financial crime risks and satisfy AML requirements. This is also crucial for reputational integrity. Company credit scoring aggregates credit scores and limits from various official sources to inform risk assessments and business decisions. Regulatory and licensing checks assesses regulatory status, authorizations, and permissions directly from that relevant regulatory register. Declarations enables you to obtain verified information on directors, officers, and ultimate beneficial owners to enhance transparency and meet AML obligations. In addition, you can obtain proprietary data such as PI certificates and ESG statements with accompanying policies where applicable. Reg then delivers continuous oversight on your digital network that you've built, with configurable alerts to promptly identify emerging risks or compliance issues. This proactive approach ensures continuous protection, reducing manual effort and enabling swift action to mitigate any potential threats. The second key tenet is Reg Exchanges, which manages your counterparty documents, forms, questionnaires, and contracts. Regulated businesses are increasingly expected to collect a growing amount of data from partners, ranging from basic contracts and agency application forms all the way through to fair value and product governance information. Through Reg Exchanges, you can securely execute document exchanges either individually or to your entire network. By using Reg, you can seamlessly enrich any document with Reg Network data, eliminating manual processes and ensuring accuracy. This facilitates the secure management of contractual documents, including offer, negotiation, acceptance processes, all within one single platform. Further to this, information requests enable the efficient collection of data across your network through customizable forms, eliminating the need for emails or spreadsheets. Reg Exchanges allows you to capture complex information directly within our system, which will enable you to analyze results and responses, particularly powerful in capturing data en masse, such as fair value or product governance forms. Through Reg, you can set deadlines, automate follow-ups, and track progress more efficiently than ever before. Finally, you've got Reg Verified. So Reg Verified gives you a snapshot of a counterparty's health on demand. This will allow you to search for and assess the viability of a business at a glance before adding them as a connection by verifying their incorporation, credit, and sanction status. In order for a business to be classified as Reg Verified, they must meet basic due diligence standards, including being active and regulated, where applicable, having a credit score greater than 41 out of 100, and being clean from any sanction lists. Once they are confirmed as being a Reg Verified business, you can send an onboarding form, such as an agency application form, for free before subscribing to them. This will shortcut onboarding processes with a no or go decision-making process. Collectively, these tools transform how you manage compliance and third-party risk. We've built Reg with regulators in mind. Our tools align with FCA priorities on oversight, third-party risk, and fair value. Whilst Reg Exchanges, which we just referenced, has been enjoyed by our customers for several years, we are continuously horizon scanning to ensure that our solution is supporting our customers with important legislation changes. That's why, as part of Reg Exchanges, we built Chains, When the fair value and product governance requirements were introduced, our market research highlighted two key issues. One was that when it came to gathering the required information, it's not just for those direct relationships or agencies. If you have sub-brokers or agencies beneath you in the chain, the expectation is that you are looking at every node of the chain. Up until this point, capturing that information has been a huge challenge, bordering on impossible. Our chains feature gives you the ability to send any document, form, or questionnaire to a connection, which then permits them to complete and then forward that same document to the next person in their chain, i.e. their sub-brokers and their sub-brokers' sub-brokers. With chains, it gives distributor one, temporary access to the document exchange features that you have access to, ensuring that when collecting information, it's reaching every distributor in the chain. The other development, based on our research, is analytics. It's all well and good capturing that information, but it's what you do with that when it comes back that's key. The challenge is it can come back in lots of different formats, Word, Excel, or a PDF that they've pre-populated. Amalgamating that data and trying to put it into a singular format to analyse is very difficult. With Reg, you send out your own form, make it simple to complete on a format that you set out for them. It will then come back in your chosen format, which means you're able to analyse responses in bulk very quickly via a download, which comes out into Excel and enables you to see all the responses on a singular spreadsheet with your own formatting. Those pieces combined are solving several challenges. For Lloyd's, we support DA compliance, TOBA governance, and operational resilience standards. With Reg, you can prove compliance, not just claim it. Let's bring this to life with an example. C&A Hardy are a specialist commercial insurer operating in both the Lloyd's and company markets with global reach. They face significant inefficiencies in broker onboarding and management processes due to legacy, manual methods involving paper, email, and fragmented workflows across departments like finance, compliance, and distribution. Reg delivered an automated cloud-based platform that enabled C&A Hardy to make instant decisions and streamline broker onboarding. The Reg network enhanced regulatory oversight by providing a real-time, centralized view of all broker partners and automated due diligence processes, significantly reducing administrative workload and allowing more focus on commercial priorities. Overall, C&A Hardy's partnership with Reg Technologies demonstrates how digital transformation in counterparty and broker management can drive efficiency, oversight, and strategic value in the insurance sector. Let's look at another use case. An insurance firm used Reg's alerting system to flag a number of critical changes in a counterparty they were monitoring that would have otherwise gone unnoticed. By monitoring this firm via our software, the customer was alerted to a number of high-risk changes over a 2-year period. Starting with their credit score fluctuating, they then started seeing late filing across all of their accounts and statements, followed by directors jumping ship. By being provided with this insight through Reg Alerts, this enabled them to take a deeper dive and realise something was untoward, prompting them to terminate their relationship with that business. In this particular case, for a business who was not using Reg and therefore unaware of those changes, it would have left 13,500 policyholders uninsured as a result of that business's collapse, resulting in replacement costs, reputational damage, and possible regulatory intervention. Reg customers, however, avoided harm. Continuous due diligence is essential as it not only prevents financial crime and compliance violations, but also serves as a dynamic catalyst for informed decision-making and risk mitigation. That's real value in action.
So let's bring all of that together. On the board is a reminder of the key learning objectives from today's session. Today we've covered how smarter tools can take the pressure off compliance teams and transform the way you manage counterparty risk. So I thought I'd summarise the 3 biggest takeaways. Number 1, oversight. RegTech gives you total visibility across your counterparties, so you're not just reacting, but you're anticipating. And this proactive stance helps you spot risks early on, stay ahead of regulatory changes, and maintain stronger control over your business relationships. Number 2, efficiency. Automation reduces regulatory risk and cuts through the noise of manual, repetitive tasks. Without needing to increase headcount, your team can shift focus to higher value strategic work that truly drives the business forward. This means faster processes, fewer errors, and a more agile operation. Number 3, confidence. With Reg, everything is done faster, smarter, and safer. When your compliance process works seamlessly, it builds trust, not just internally, but across the market. And this trusted presence is a powerful competitive advantage, enabling you to win more business, grow sustainably, and operate with resilience in an evolving landscape. In short, RegTech isn't just a nice to have anymore, it's imperative for staying competitive, scaling effectively, and turning compliance from a cost center into a strategic enabler. I know we've kind of actually beat our time of the webinar, but thank you so much for joining us today, and we hope this session has given you some real food for thought. So we'd like to open the floor to any questions that you may have. If you want to drop them in the chat, and we'll give everyone 5 minutes or so to think of any.
Hopefully that was fairly comprehensive, but yeah, if there are any questions, feel free to put them in the chat. Okay, well, I think there doesn't look like any questions, so let's...
Oh, none from me. Cool. Give everyone a couple more minutes to put questions in if they want, but we've got a final slide that we thought we'd share with you all. If you'd like to learn more, you can scan one of the QR codes on the board. Number 1 is to register for the Reg Network. It's completely free. Once registered, you can instantly explore potential trade partners and quickly decide whether to start a business relationship through our Reg Verified tool that we referenced earlier. The second is Chart, Challenges and Risk Tracker tool that we created. It's an innovative counterparty health analysis tool that provides a fast, powerful snapshot of your current counterparty risk management approach by highlighting strengths and weaknesses in both risk and operational efficiency. In just a few clicks and under around 10 minutes, Chart will help you gain clear insights to improve your processes and make smarter decisions. So if there aren't any questions from anyone, feel free to connect with us after the session. We'd love to continue the conversation. Thanks again, everyone, for joining, and we'll be sure to send out the recording of this for everyone and the accompanying slides.
Cool. Thanks, guys.